Hi there, good afternoon. You're watching Closing Trades on ET Now. I am Snehisha. With me is Achesha Adhwari. And over the next hour and a half, we're going to be taking you through everything that's happened in the market, get a technical as well as a fundamental deep dive on some of the stocks that have been in focus, some of the themes that are playing out today. But it doesn't seem like a whole lot is playing out, because take a look at the Nifty, 0.2% lower and continues to be under immense pressure now, even below the 25,800 mark at the day's low is where we're at for the Nifty. Shifting focus to the sensex, also 0.2% cut over there. Nifty Bank slightly lower with a cut of about 0.3%, and want to see what the broader end of the market is doing. The mid-cap index is inching lower than the benchmarks of almost a 0.5% cut coming in for the Nifty mid-cap index. Small-cap index too, in fact, is doing much worse. A 0.7% cut coming in on the Nifty small-cap index. So that is the way the market breadth is looking like right now. Let's take a look at some of the sectors that are in focus, like we were talking about. It's some of the FMCG and realty names that are under pressure today. On the flip side, PSU banks are shining bright, with Canara Bank, Bank of India, Bank of Baroda, PNB, SBI, all of them doing very well, followed by Nifty IT, wherein Infosys, Wipro, LTI, Mindtree are seeing very nominal gains. Then you have metal and pharma on the flat line, and then the cuts start intensifying as we go across the chain from energy, auto, banks to FMCG, realty, and then Nifty media under immense pressure. That is the way the markets are trading right now. From the broader end of the market, lots is happening. IGL on the back of a very bullish brokerage note is up 5.2%. Aditya Birla Fashion, ABFRL, is seeing a good spike today. Aditya Birla Real Estate, on the CCI approval for the sale of their papers and pulse business to ITC, is also doing very well for itself. On the flip side, immense pressure on Akzo Nobel, a 13% cut coming in. Improved very nominally from the day's low. It was trading lower by about 15% after almost 49 lakh shares have changed hands in a block trade. 13% cut on Akzo. Saregama India is lower by about 8%. IOB, on the back of that government OFS opening at a 7% discount to the current market price, is lower by about 5.25% too, which is the case with Praj, HBL Engineering, GMDC, all of them seeing cuts between 4 and 5.5%. So, Ashesha, that is how the markets are trending right now.
Well, yes, several individual stocks and sectors to talk about. We'll talk about that in just a bit. But before that, speaking at the India Economic Conclave 2025, Union Finance Minister Nirmala Sitharaman said that India has safeguarded its own industries, but the intention was never to weaponize tariffs, and emphasized that lowering the debt to GDP ratio continues to be a key focus area. Let's go across and listen in to what she had to say.
Today, weaponization goes without criticism. There are, whispers in the corridor. Oh, no, that's not right. You shouldn't be doing it. And suddenly we have newer people coming up saying, we'll come up with tariff barriers. And there's no questioning. So that seems to be the new normal. Trade is getting weaponized through tariff, through many other measures. And India will have to negotiate its way carefully in this, and not just take care of trade, but I think overall our economy's strength is what is going to give us that additional advantage. We've seen that we are able to bring down debt to GDP since post-COVID, when it had touched over 60%. Now it's already coming down, and we've set our goal that from the next year, next financial year, that should be the core focus area. Fiscal deficit will still be a marker. We will care for it.
That's the word coming in from the finance minister at the India Economic Conclave. But India's growth could be revised upward to 7%, says former Deputy MD of IMF, Geeta Gopinath, at the India Economic Conclave as well. She cites tariff headwinds for the world, but adds that India remains in a position of strength as it signs trade deals with other nations. Go across and listen into what she had to say.
So if you look at the IMF's projection for growth for India in 2024, that was last year, this was October 2024, they were projecting what growth was going to be in 2025 for India. This is before the elections in the US and everything. The growth was projected to be 6.5% for India this year. This October, the IMF revised up India's growth for 2025 to 6.6%. But that came in before the second quarter growth numbers came out. So I expect they will move up to 7% the next time they come up with their numbers. So India is actually doing better than was predicted before the crisis.
Okay, so that's the word coming in from Geeta Gopinath. But let's also talk about markets then. And Nifty has now slipped below that 25,800 mark. To decode what the outlook is, Kunal is now with us in the studio. Kunal, afternoon. Nifty now below 25,800. Your view, both on Nifty and Bank Nifty?
Yeah, we are both below the psychological marks for both the indices. The Nifty back again below the 25,800 mark. The more crucial support for the Nifty is 25,750, where we bounced off the last time almost a 250, 300 point kind of a bounce for the Nifty. The last time when we hit 25,750 mark, which also apparently coincides with the 50-day moving average. But the concern this time around is the weakness in the banking index, and that index being falling below the 59,000 mark. And trying to test the previous lows which it hit I think a week or two back. That I believe could be a concern for the markets, because even with the strength in the PSU banking names or maybe some sort of a resilience today, you're not seeing that the Bank Nifty is showing a tad bit of an outperformance. The put call ratio for both these indices are almost at 0.56 and 0.76 respectively for Nifty and Bank Nifty. Maybe that could call in for some sort of a respite on an intraday basis. But then with this retest of the previous supports, I believe if we break below the 25,750 mark, then I think there could be a chance that we may slip further for the Nifty as well as for the Bank Nifty.
Okay, so that's the take coming in on where the markets are headed. Kunal, the weakness continues to persist in the broader end of the market as well. Yes, some recovery, very nominal, something that we've seen over the course of last week. But once again, it's the small cap space that is bucking the overall trend too and is trading deeper, with cuts deeper than the rest of the market. What is your take on the broader end of the market, especially the small cap basket?
See, the ratio charts are still indicative that the mid caps and small caps may not see a very big respite over here. So, and that's one of the reasons why in the last maybe few weeks, few months, the mid cap and the small caps have been skewed in terms of the pressure with respect to the large cap names. So I think that tilt and that skew or that comparative weakness from the mid caps and small caps, that will continue for some more time, because there has to be a point where, from say being at one end of an extreme in terms of the ratios, you have to either come back to a normalized range or the lower side of the range, and that generally takes a lot of time for the indices and the sectors to try and narrow down their mean reversion. So I think in that context, I would probably expect that this is a phase where the mid caps and small caps would underperform, the large caps would shield the market volatility as such, and that's where you might probably get to see a relative outperformance. So you have to be very, very choosy, very selective with respect to the kind of stock picks one takes up specifically from the mid caps and small caps, because I believe that this disarray of sorts will continue for at least another few months to go.
Okay, so that's the view coming in on the index level and broader markets. But Kunal, some stock specific ideas for our viewers this afternoon?
Yeah, so two buy calls focusing on large cap names and especially the relatively low to moderate beta stocks. Sun Pharma is apparently one of them. The stock showing signs of strength, trading at 1785.90 thereabouts on the spot levels. So we'll look out for targets in the range of closer to 1850 for Sun Pharma, stop loss at 1775. And the second stock, which is again showing a little bit of a respite on the short-term basis, is I'll just get the name of the stock. That's Infosys, because even that stock is showing signs of a recovery. The IT stocks are more or less trying to just about get back into the shape in terms of a breakout. Infosys nearing that 1600 mark as a breakout point. So 1650 is where I would place the targets for the near term. Stop loss at 1575.
Okay, Sun Pharma and Infosys, so the larger caps and the defensives are looking good to Kunal right now. But let's just focus and talk about a stock that has been doing exceedingly well for itself today, and that is Meesho. Let's have the chart for Meesho and see if it still continues to be locked in upper circuit. Yes, it does. And it has been there since the midday mark of the day. Very good move coming in from Meesho today. And this has pushed its CEO and co-founder Vidit Atre into the billionaire territory. Vidit Atre, who holds 11.1% stake of Meesho with about 47.25 crore shares. This move today brings his stake in terms of value to 10,220 crore, which is slightly above the billionaire mark. So very good move coming in from Meesho that's made its co-founder and CEO a billionaire today. But why this move in the first place? Let's understand that. This is on the back of a very bullish brokerage note coming in by UBS this morning, wherein they've initiated a buy rating on the stock with a target price at 220 rupees per share, which now after this move is not much higher for Meesho. So let's see if there is a further addition or a further upgrade in terms of their price target coming in for Meesho. They believe that the company's asset light strategy and negative working capital business model will do well for its margins, its financials going ahead, and this will also boost profitability, which is unlike other internet platform players who are in fact struggling to grapple to profitability. They are modeling net merchandise value, which is the NMV CAGR of 30% between FY25 and FY30. They're also modeling contribution margin and adjusted EBITDA margin as part of the total NMV, reaching 6.8% and 3.2% over the next 5 years, or by FY30, that is. They also say that what could be the reasons that could drive this NMV to the 30% CAGR till FY30. Annual transacting users are expected to grow from 199 million now to 518 million in the next 5 years. So that's a very big push coming in. In fact, it's a 2.5x growth that they are penciling in. Annual ordering frequency will increase from 9.2 to 14.7, and AOV, which is the average order value, is expected to go down. Despite this, they're saying that this could be a good thing because Meesho is going to be passing logistics efficiency into its own ecosystem, which is a very big positive coming in for Meesho. So yes, second straight day of gains coming in for Meesho. Locked in upper circuit today, but the stock was also up about 8% higher yesterday before it simmered down with a 5% uptick. This is on the back of some very healthy volumes that we saw in Meesho yesterday, to the tune that 44% of its total free float market capital was being traded on the bourses yesterday. So that's the kind of liquidity crunch that Meesho was seeing. On the back of that, Meesho did well yesterday, and on the back of this UBS note, it's doing very well right now. But on that note, it's time to slip into a very short break. On the other side of this break, we'll get a better sense on some of the stocks that are buzzing, both on the fundamentals and technicals. So be with us.
Fly Emirates, fly better.
सामने नया सुपरमार्केट खुलने वाला है। क्या करूं कि पुराने कस्टमर भी रहें और नए भी आ जाएं?
देखो, आप दुकान के बाहर एक चाय कॉर्नर लगा सकते हो। चाय पीते पीते पुराने कस्टमर बातचीत करेंगे, उन्हें देखकर नए कस्टमर भी आएंगे और एक्स्ट्रा कमाई भी होगी। इसके अलावा आपके बिल्स देख के समझ लेते हैं कि कौन सा सामान कितना बिका है।
Presented by Aegis Federal Life Insurance, हर वादा मुमकिन. In association with SBI, the banker to every Indian truly.
पैसा लगाना है तो सेंचुरी क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी क्लब प्राइम, रहो बेफिक्र।
बिजली का बिल 5000,
आउटगोइंग तो जा रही है, आपकी क्या तैयारी है?
रूट कैनाल 25000,
आउटगोइंग है जा रही, आपकी क्या तैयारी?
सीनियर क्लास की फीस 1 लाख रुपीस।
मनी की आउटगोइंग रहेगी जारी, इसीलिए कर लो तैयारी। SIB के साथ इन्वेस्ट करो और जरूरत पड़ने पर SWB के साथ सिस्टमैटिकली विड्रॉ करो। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें।
चलो चलो AI से पूछते हैं। Do fish get thirsty?
If AI will use so much energy,
Then what is the future of energy?
Infinite clean energy. Avada, always clean, always on.
फॉरेक्स ट्रेडिंग अभी
एक ट्रेड में सिक्सर।
प्रसिद्ध पहले सेफ्टी वरना क्लीन गोल्ड। अनऑथराइज्ड प्लेटफॉर्म पे फॉरेक्स ट्रेडिंग यानी नुकसान, धोखाधड़ी और कानूनी कार्रवाई का डर।
मतलब नुकसान की हैट्रिक। इसीलिए आरबीआई वेबसाइट पर जाएं, ऑथराइज्ड लिस्ट जांचें। आरबीआई कहता है
जानकार बनिए, सतर्क रहिए।
KSH International Limited now launches an initial public offer of equity shares of face value of 5 rupees each in the price band of 365 rupees to 384 rupees per equity share. Bid offer opens on Tuesday, December 16, 2025 and closes on Thursday, December 18, 2025. For risk factors and other details, please refer to the red herring prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
Okay, 2026, take notes. Manifesting. More bubbles, less troubles. For my little Miss Sunshine, tickles and giggles. Also want to be a biker chick this time. And year 2026, only love for my people and myself. To manifest my best life, nature's cosmic energy. Now mine, natural diamond intention pendants.
The best holiday ever's finally over.
Thank you!
When you fly Emirates, your holiday isn't over until your flight is over.
माही, कोई कूल बैंक सजेस्ट करो ना जो सोशली कॉन्शियस।
फिर तो एसबीआई कूलेस्ट है।
Really?
एसबीआई ने होनहार बच्चों को स्कॉलरशिप्स दी, गांव के यूथ को ट्रेन किया, स्पेशली एबल्ड को सपोर्ट किया, विलेजेस को अडॉप्ट किया।
That's so cool, man.
SBI, the banker to every Indian. Truly.
Rohit.
Yes, sir.
We need to talk, okay?
That's Air India now.
Welcome back. You're still tuned into Closing Trades right here on ET Now. And let's now put the spotlight on Protean eGov. The board of directors have approved acquisition of about 4.95% stake in NSDL Payments Bank. What does that mean for the company? To understand that, we now have the MD and CEO at the company, Mr. Suresh Sethi, now joining us. Mr. Sethi, afternoon, and thank you so much for joining us here on ET Now. First up, let's talk about your investment in NSDL Payments Bank. How will it fit into Protean's long-term vision of building population-scale digital financial infrastructure? And what kind of strategic outcomes would you define success, would actually define success over the next few years?
Payment banks were, as we all know, originally conceived to solve last-mile inclusion challenges. And they're clearly now emerging as institutions which are able to process high throughputs. They are technology-led financial platforms by design, and they serve millions within a regulated framework. NSDL Payments Bank clearly reflects this evolution, and it has been built with a digital-first vision to provide simple, secure, and accessible banking to the last mile. And I think that is what, in a way, drove us to look at this as a strategic investment and partnership, because Protean has been building digital infrastructure at scale. And therefore, we believe that this gives us a chance to partner over here and co-create, pilot, and scale a comprehensive suite of certified digital banking technologies on a secure and compliant platform, with NSDL Payment Bank serving as one of our anchor customers. We clearly see a lot of adjacencies with our existing businesses. As you're aware, Protean is one of the only, or the uniquely placed to be the only company which provides all four facets of digital identity. So powering the digital stack of the bank. It opens avenues for collaboration across onboarding, authentication, and regulatory tech. And by being able to create this complete suite of certified and regulated digital tech, we see the ability to expand this to other institutions.
Okay, Mr. Sethi, that sounds good. But now that you've scaled this partnership with NSDL Payments Bank, any plan on scaling this kind of partnership to other banks, other fintechs, or maybe any other regulated entities, anything in the works?
No, this is just directionally where we are going. As I mentioned, we would definitely look at partnering with institutions which are contributing to India's digital stack. And the philosophy definitely, converges over here. And therefore, we look for any and all opportunities where we can scale up.
And Mr. Sethi, 3 to 5 years down the line, how could this partnership then help NSDL Payments Bank contribute to your top line? What kind of benefit financially will the company have?
Would be difficult to put a forward-looking statement over here, but it is very core to the businesses we do, as I already mentioned. And therefore, we clearly see synergies coming out in our identity stack, the line of business where we provide all the digital foundational services based on identity, as you've seen our business vertical over there. The other area we clearly see getting a boost is the app layer that we are building on top of our identity stack, where we are developing RegTech, we are developing digitization suites and applications. And I think over here, as we co-create with the bank in building a digital tech suite of services, that is where we see the leverage and the inflection points coming.
Okay, and Mr. Sethi, can you give us an update on the progress of the 1,370 crore rupee landmark mandate from the DAI? What is happening on that front?
Now, we are happy to report that some of our Aadhaar Seva Kendras have gone live since we last spoke. Definitely the deployment is going on. And we look forward, as we mentioned, to start clocking revenues from the last quarter and then moving into the next quarter for carrying the deployment to the full scale. So there is good progress on that.
And Mr. Sethi, you also have cash worth about 800 crores on your books. How will this cash be deployed if you have any plans?
So the cash gives us a good base on which to plan multiple things. As we mentioned earlier also that, over the course of last 3 to 4 quarters, we've secured some very critical, nationally critical mandates from the government, be it the Sarsai KYC 2.0 or the Bima Sugam or the Aadhaar Seva Kendras deployment. So part of our capital is definitely going towards, financing or funding these large-scale turnkey projects where we are deploying digital public infrastructure at a population scale. The other area is to clearly look at inorganic opportunities like the one we've recently, concluded with NSDL Payments Bank. We will keep a lookout for innovative technologies. We'll keep lookout for partnerships which take us a faster go-to-market or open opportunities for market access. So that is always something which the company is looking out towards.
Okay, that sounds positive. And Mr. Sethi, I know slightly forward-looking, but if you could throw some light on if there are any new government contracts in the works, anything in the pipeline that you could share?
So we are always on the lookout for adjacent businesses in the place of digital public infrastructure. As of now, no particular comments on any contract. But yes, these are opportunities we are constantly scoring for and working on.
Understood. And Mr. Sethi, how are your new business verticals performing and how have they been contributing to the overall top line growth of the company?
As we spoke earlier, we are very happy to report that, the last quarter was the first time that we were able to bring in double-digit growth from our new businesses. Our businesses contributed almost 12% of our top line in the ensuing half year, and we see definitely momentum on that front. This is further bolstered by the large scale, large projects that we are working on, which have started to contribute on the same basis, and therefore the diversification directionally is moving as we have been envisaging all along.
Okay, so lots to watch out for. And lastly, also help us understand what is your growth guidance going ahead in terms of revenue as well as margins. Any number if you could share with us on the financials front?
So as we've been mentioning earlier, we are looking at consistent growth going forward. And some of our new businesses, which especially are SaaS-driven and more aligned towards fee-based businesses and creating an annuity pool, will definitely improve the margin profile for us going forward. I will not at this stage share any specific, numbers, but really see a strong trajectory with especially the large-scale projects also contributing to it, and margin profile to improve with fee businesses and annuity businesses kicking in.
Okay, Mr. Sethi, on that note, we'll let you go. Thank you so much for joining us and sharing with us your outlook for the company and the plans ahead. Thanks once again. With that, viewers, let's shift the pivot to the conversation on the fundamentals right now. We have Mr. Deepan Mehta, Director at Elixir Equities. Give us a sense on where you're seeing the markets headed right now. Overall, there is a sentiment of negativity in the market, and it has been since the start of this week. And in fact, that intensified yesterday too. We're even struggling to hold on to 25,800. Directionally, where do you think the markets are headed?
Yeah, good afternoon. Thank you for having me on your show. I think that the sentiment is a bit subdued because of this rupee depreciation, and that's clearly playing on the minds of a lot of investors. And this kind of a decline which we have seen in versus the dollar and all the other currencies does have implications for the economy, for the inflation, and in a way it does affect the kind of investor strategies also, because till now we were focused largely on domestic businesses, and now I think international businesses also come into play. So I think that this entire rupee depreciation, delay in getting a trade deal with US, these seem to be playing on the minds of investors. But I think that this is a temporary phase, and typically once the earnings season starts in January, I'm pretty hopeful that the numbers which will come through will be very impressive, because it's been a good earnings season because of good festive season and marriage season also. So I'm hopeful that this is just sideways correction and investors need to wait through these tough times.
Okay, okay, so that's the view on the market. But Mr. Mehta, also wanted your thoughts on Meesho. If you track that counter, we were discussing that with Snehi before the break. The stock is locked in upper circuit of 20%, and UBS is very bullish on that counter. Your view on Meesho if you track this company?
Yeah, see, it's a concept stock, and in a way, one of its kind. Investors don't have access to any clear kind of a marketplace of the type of business that Meesho has got. And they are in fact the largest marketplace. They are diversifying their product revenues as well. And although there are certain doubts around monetizing because they don't charge any commission, but investors are hopeful that by offering other services like logistics and data and advertising, the company should be able to turn positive sooner rather than later. So from that point of view, I think there's a lot of interest in such businesses. In this country now, we are finding very difficult to find good quality growth stocks, and it's all these new age businesses only which can really, create sustainable long-term growth, and that is why I think investors are latching onto these companies. I also suspect that because the issue's gone so successful, investors who may have got a smaller allocation in Meesho may want to, tank up and average higher, and that may also be in play over here. But I would say that at these levels, better to wait and watch. We have seen this play out also in urban company. Also, something similar happened. The stock got listed, a lot of fanfare around it. Great appreciation went to 160 or so, and then corrected from there. So I'm pretty certain that sooner or later we may see a correction in Meesho as well. So I'm not chasing the stock at these levels, but these are all great companies to track and keep in mind to perhaps invest at an appropriate time when there is some valuation comfort.
Okay, that's an interesting take coming in on Meesho. But on that note, viewers, time to slip into a very short break. We'll keep the market Welcome back. You're still tuned into closing trades right here on ET Now. Nifty is now down about 55 points as we speak, just hovering near that 25,800 mark. Nifty Bank is also down 130 points near that 58,900 mark. Mr. Mehta, coming back to you, and let's also talk about IGL then. That stock is also gaining nearly 5% in trade today. Of course, that is on the back of Nomura report, which suggests that the stock has already corrected quite a bit, and hence they believe most of the negatives are priced in. What will your thoughts be on IGL?
See, I think basically it's a utility company, and now with greater and greater electrification taking place, I'm not sure the prospects of a company like IGL are as great as they were maybe a few years ago or so. And although it is cheap, maybe good dividend yield as well, I'm not certain about the growth prospects of IGL. So from that point of view, it is an avoid. The management has been trying to grow its area of operation. They've been trying to get into newer geographies as well. But by and large, I think they've not been very successful over there. The main attraction for IGL was when they were giving gas to all the public buses and public transportation, but now we are seeing heavy electrification taking place over there. So from our point of view, I think IGL there could be a trading rally, but certainly is not very high on the list in terms of investments.
Okay, so that's the view on IGL. The stock is up a solid 6% in trade today on the back of that note. But let's also put the spotlight on Avenue Supermarts or D-Mart, which has seen two divergent brokerage takes in the last two trading sessions. CLSA has come out with a bullish note, whereas on the other side we have Goldman Sachs, which continues to remain bearish. Snehi is right here to decode just that and what these brokerage houses have to say with the bull versus bear case. Snehi?
Well, absolutely. 2 consecutive days and 2 divergent views coming in on Avenue Supermarts. A bullish case coming in from CLSA and a bearish case on the other side from Goldman Sachs today. So let's understand what the bull and bear case is made by and put forth by both of these brokerages. To start by, let's talk about the stance and the target price set out by both of these brokerages. And on the bullish side, CLSA has reiterated its high conviction outperform rating on D-Mart with a target price of 6,300 rupees per share, which is roughly a 64% upside to the current market price. On the flip side, Goldman Sachs continues to be bearish. They've maintained their sell rating with a target price unchanged at 3,425 rupees, roughly a 12% cut from where the current market price is. Let's talk about valuations now. CLSA believes that once the free cash flow, that will start looking good and it'll start looking attractive post the correction and post the stabilization that it has in its store expansion plans, and risk reward favors an outperform rating from them. On the flip side, on the bearish case, earnings downgrade cycle continues while valuations continue to be elevated is what Goldman Sachs is flagging off for D-Mart, and they're saying that despite the recent correction, the stock still is trading with a very high valuation at 75 times the FY27 estimate. So that's the bull and bear case on valuations. Let's now look at the earnings outlook that both these brokerages have for this company. On the bullish front, CLSA believes that D-Mart is expanding its private label offering, and this is happening at a discount of 40 to 50% versus other branded alternatives. They're scaling their private labels to support long-term margin and cash flow improvement, and India's consumption and retail outlook remains robust. On the flip side, let's talk about the bear case that Goldman Sachs is presenting here. They believe that the company faces heightened execution as well as estimates risk, and FY26 consensus EPS is already down 9.6% on a year-to-date basis. Now, if they want to meet the FY26 consensus, this is what Goldman Sachs believes, that the second half PAT must grow at 25% versus just the 2% growth we've seen on a year-on-year basis in the first half. This seems like an unlikely event, and this is why Goldman Sachs believes that there could be further room for more downgrades on the stock going ahead. Shifting focus to the store addition metric. On the bull front, CLSA believes store additions will remain high in the next few years. They see store addition rate at 15 to 20% annually, and in fact, management currently has the visibility for 2,200 stores. On the flip side, Goldman Sachs is forecasting only 75 store additions in all of FY26 compared to 50 in FY25. The market right now is anticipating 85 to 90 is what Goldman Sachs believes based on their conversation with analysts, and this elevates the risk of missing the store addition targets that the company had set for itself at the start of the year. Lastly, let's talk about how DMart stacks up versus competition from its quick commerce peers. On this front, CLSA believes that value retailers like DMart will continue to stay relevant for India's mass urban consumers. Quick commerce is projected to grow less than 20% of FY35 urban consumption according to CLSA, and this leaves a large addressable pool for DMart, and DMart's business model has deep competitive moats against quick commerce is what they believe. And on the flip side, Goldman Sachs believes that competitive intensity for DMart is rising and is quite high because of the rising demand for quick commerce and new players in this segment. And Blinkit's net order value is expected to exceed Avenue's net sales by FY27. That's a big negative for DMart that Goldman Sachs is projecting based on their predictions. So that's the bull versus bear case coming in on Avenue Supermarts or DMarts as we know it. Two brokerages, two very opposite views in two consecutive trading sessions. So that's what stood out to us. Back to you.
Okay, so DMart continues to remain in focus. We'll also try and get a technical view on that counter. Nagraj Shetty, Senior Technical Research Analyst at HDFC Securities, now joins us. Mr. Shetty, afternoon. Your view technically on DMart. Snehi just presented the bull versus bear scenario, but that was, of course, the fundamental bit of it. Where do you see the stock headed in the near term?
Hi, good afternoon, Shisha. DMart, no doubt, has been a constant downtrend over the last 4 months. We have seen lower tops and bottom formation without any respite. The stock has been hammered from the highs of around 4,900 levels to almost 3,800 levels. The most of the damage has been done. I think some more weakness is left. Another 150 at lower levels, around 3650, 37. I'm expecting the stock to get the support base around 3,700 to 3,650 levels, where I'm expecting the chances of sharp bounce back from the lower levels.
That's the view coming in on Avenue Supermart. It is currently trading at that 3,823 odd levels. But let's also discuss some other buzzers in trade today, and several individual stocks continue to remain in focus. Something like SBI, that one is up 1.5%. Management, remember, has reiterated their guidance for FY26 and FY27, 1.5% higher for that counter. Shriram Finance is also up nearly 1.5%. Your view, Mr. Shetty, on both these counters, SBI and Shriram Finance?
Yeah, State Bank has been a strong uptrend over the last few months. Long-term, medium-term charts are still positive. And after showing a consolidation pattern, it has witnessed upside breakout of the small range. SBI currently trading around 975 levels. Overall chart pattern is looking positive, and I'm expecting more upside towards the 1,000 to 1,010 levels, which is next set of hurdle for the stock price in the near term. And Shriram Finance is also similar kind of a movement what we can observe. We observe the range mode action somewhere around 870, 880 levels. Today made an attempt of breakout of the range, was not successful. I'm expecting the trend remains intact for Shriram as well, and more upside is likely towards 880 to 890, which is the next strong resistance for the stock price in the near term.
On that note, we'll slip into a very short break, and when we return, we'll track the last lap of
closing trades. Let's now put the spotlight on Akzo Nobel then. There was a major block deal where about 49 lakh shares changed hands today. And Imperial Chemical is the likely seller in this block deal. Rabinder is now joining us with more details on this. Rabinder?
Well, yes, Akzo Nobel is under pressure on the back of the block deal. Well, where 48.8 lakh shares change in a hand, which is approximately 11% of the total stake, and the most likely seller will be Imperial Chemical Industry, which hold a 45.46% stake as of September. September 2025. And remember that earlier in September 2025, there was a significant block deal where the promoter sold approximately 5%, which is equivalent to approximately 23 lakh shares in ExxonMobil India through a large institutional buyers, and the transaction were executed by multiple block deals worth rupees 764 to 765 crore. And major buyers include on that block deal was a Nippon India Mutual Fund, Goldman Sachs, Morgan Stanley, etc. And the selling entity was the Imperial Chemical Industry Limited. And today also Imperial Chemical Industry has also sold their approximately 11% of the stake. So back of this block deal, ExxonMobil is under pressure and the stock is down more than 13.5%.
Okay, Ravindra, thanks so much for taking us through that. Give us a sense, Nagaraj, or what you're spotting on the charts for someone like an ExxonMobil, the kind of pullback that we've seen today. Does this make the stock attractive to buy? And also weigh in and give us your sense on how Asian Paints is shaping up on the charts.
Yeah, in Axo, we have seen some block deal. Because of that, sharp decline was seen in today's session by around 13%. Chartically, the stock has done enough from the higher levels. And 3050 to 3000 is going to be a good support for this stock price. I'm expecting possibility of an upside bounce from the low levels. I think 3000 to 3050 is going to be a strong support. And the second is Asian Paints, and the stock price has witnessed selling pressure from near 3000 levels and showing consolidation pattern. I'm not expecting a great chart pattern for the bulls right now. Having run up from the 2300 to 2950 and showing some correction, I think it's going to be a beginning of the correction, and some more weakness could be there. Overall chart pattern is indicating negative bias for the stock price in the near term. I'm expecting 2650 is going to be the next set of support for the stocks, at least in the next couple of weeks.
That's the technical view coming in on the entire paint sector, but we now have Mr. Pashupati Advani from Global Foray now joining us. Mr. Advani, afternoon, your view on the paint sector, anything that you can spot for us, and fundamentally, how does the sector appear to you? Do you think competition is a real threat in this industry?
New players obviously feel that there's business to be done, so they've all started. JSW started, Aditya Birla Group has started. These are all big and powerful houses with deep pockets, and they feel that the paint sector is the next growth sector and the proxy for the growth in the market. Obviously, it'll take time, and in the meantime, the foreign players are also getting pressure to maybe exit. So I guess it looks like ICI has been selling. Even Asian Paints has had some issues because there's been a big seller in that for a long time. And I don't know. I mean, it's like there is lots of players, that there will be consolidation. But in the interim, it seems a little messy.
Mr. Advani, that's your take on paints. Good afternoon. Also help us understand about cements. While we're talking about building materials, what is your take on cement and that entire industry? Absolutely nothing has happened since the start of the year, nothing incremental, in fact, to talk about for cement. But do you believe the next year could hold some price momentum, some price action, and maybe some upward trajectory from here on for some of the listed cement names?
So the listed cement names have been making money because the government has been investing in infrastructure, as well as the real estate companies with RERA finishing all their buildings. So yes, there is huge demand. And the players also are getting fewer because there seems to be some consolidation in the industry. However, we've not really seen much private sector increase in capacity. So I think that's been a bit of a slowdown because people feel that you can't put a cement plant up in like 6 months. It takes time. So at least there should be plans, and there are no plans. So let's see what happens. But I like the sector, but as you said, it hasn't done very much. I think it'll suddenly break out, but we just hope for the best.
Indeed, so the sector has not done much over the last few months and even years. But let's put the spotlight on one stock which is gaining in trade today, and that is India Cements. The stock is up more than 6%, one of the biggest gainers from the Nifty 500 index. Kunal, technically, what will your view be on this counter?
Yeah, this comes as a surprise for India Cement because frankly the stock was just about going through a ranged consolidation for the last 1 week. 410, 422, 423 thereabouts as a range or a 3% band for India Cements. Today the stock seems to have broken out of this band and a resistance breakout. This looks like a very interesting chart now, and potentially when you look at this on the quarterly basis, the yearly charts, it looks like that there was a phase of a major pause for India Cements and that the stock is now coming back into a breakout or a trending mode back again after a major pause. After the phenomenal uptrend the stock has shown from those 2018-19 lows for India Cements. So it's been a fantastic last 5-6 years for the stock, and it seems like that the pause which was there for India Cements, that is now behind, and we are looking at the stock now resuming the uptrend for itself.
Okay, so that's the view on India Cements. The stock at about 434, but as I mentioned, 6.5% higher today. On that note, we need to slip into a very short break, but more news and updates will come up on the other side. Don't go anywhere. Trades right here on ET now, and let's put the spotlight on some individual stocks which continue to remain in focus. We have Max Healthcare. That one in fact is down 3.5% in trade today, the biggest loser from the Nifty 50 index, followed by Apollo Hospitals. So both of these healthcare counters continue to remain in focus. Kunal, your view on both Max Healthcare and Apollo Hospitals?
So I'll start with Apollo Hospitals. That's a very interesting chart because being a top name, the stock has shown some, I would say, exceeding amount of price correction in the last 2 months or so. And we've seen the stock now falling sub the 7,000 levels from a point where I think it's almost been like a 15% correction for Apollo Hospital. And these are not high beta stocks by any measure. Apollo Hospital is not a stock which goes into a 10-15% correction in a matter of few weeks. So this has been a surprising move for Apollo Hospitals. I looked at across the other hospital chain names, and the move seems to be trickling, or maybe some bit of a trace in terms of the sell-off seems to be trickling into the other stocks like Fortis, etc. So I believe that this could be a move potentially where many of these stocks are now looking weaker on the charts. But it's not at current levels for Apollo Hospital specifically that I'll suggest a short, because now the indicators on the weekly charts are getting into that, or just about getting to that overbought territory. So maybe another 150 to 100 points on the downside for Apollo Hospitals, and that actually would probably throw in a good opportunity to go contra on the stock.
Okay, so that's the view on Apollo Hospitals, but let's also talk about a couple of defense counters which are under pressure today. Something like a Cochin Shipyard, that one is down over 3% in trade to trade near that 1500 odd levels. Nifty Defense, that one up for you on your screens, down 1%, but Cochin Shipyard 3.5% lower on that counter. Paras Defense is down 2.5%. HAL, that one rather outperforming as compared to its peers, but despite that, sitting with a cut of nearly 0.7% as we speak. Mr. Advani, your thoughts on the entire defense sector. What do you make of the valuations that it is currently trading at? And do you believe valuations have now cooled off, and perhaps it would be the right time to enter into these stocks if someone is looking at it from a long-term time horizon?
I think we've had a little bit of a coming down of all these stocks, but I think we're still seeing the Gora is leaving slowly. So I think that's what the big challenge is. And these are all the good name stocks that they've been investing in. You know, some defense stocks, you mentioned the hospital stocks, those are the top of the pack. Max and Apollo are the top of the packs where all the FIIs are in. So I think they're still selling, and I think that selling will continue through the end of December, simply because I think they've had a pretty decent amount of redemptions this year. So I'm not so optimistic that we should go in, but we should look at maybe in the last week of the year trying to bottom fish, because if there's money coming in January, then we'll get a January effect, which I think we've had maybe 17, 18 times out of the last 20. So let's hope that we get that for 26 also.
Okay, so that's the view on several of these defense counters which continue to remain in focus. But let's shift focus back to the banking sector. And Indian Overseas Bank, that one is in focus because the government is looking to divest up to 3% stake in the bank through an offer for sale that opened today. Mithali is now joining us with more details about the OFS, and the stock, remember, is tanking in trade. Mithali?
Right. So the government has announced plans to sell up to 3% stake in the Indian Overseas Bank, which currently holds around 95%, 94.96% stake in the bank. Now, the stake comes with 2% as the base offer, while an additional 1% is there for the green shoe option. The OFS has been set at a floor price of 34 rupees, which is actually at a discount of 7.6% from the yesterday's closing price. And at this floor price, the deal size is actually totaling up to 1964 crore rupees. The offer will open for the non-retail investors as on today, that is December 17, while the retail investors can bid on the same on December 18, that is tomorrow. Now, ahead of the discounting prices and the increased supply, the bank might see some volatility in the coming days ahead.
Thanks so much for taking us through that. So IOB in pressure today on the back of this OFS that has been launched by the government, and this is happening at a 7% discount to the market price right now. So on the back of that, in fact, the stock has seen some more pressure. At one point, it was low by about 3%, but a 6% cut is now what we're seeing on IOB. Nagraj, quick take on Indian Overseas Bank. Are you tracking this stock, and how is it shaping up on the charts?
Yeah, shaping up negatively. It was coming down since last many sessions, and today came down sharply after the announcement. Chartically looking weak, 33 is going to be the next support. I don't know whether that's going to hold or not. Chartically, even RSI volume pattern is also indicating more weakness in the near term. So time being, 33 is going to be the support one. Let's see how things work out. Even though it bounced back strongly, but I'm not expecting that's going to sustain for long.
Okay, so that's the view on Indian Overseas Bank. But let's also talk about Hindustan Zinc. That one has been buzzing for the last several trading sessions on account of surge in silver prices in the global market. Remember, silver is now past that $65 per ounce mark. It has gained more than 6% in the last 2-3 sessions alone. Hindustan Zinc, of course, is the direct beneficiary because it generates more than 20% of its revenue from silver operations. Kunal, your view on Hindustan Zinc at 578?
See, I think at current levels, I would believe that the stock could, moderate a little bit more from current levels, because my sense is that silver prices, in rupee terms, I think have hit, some sort of a overbought territory. We are above the 3 sigma band for, the silver on the rupee prices, about the 2,04,000, 3,000 mark. So I think in that context, I would believe that potentially over the next, few weeks, you might see some bit of moderation coming back. And that, I think, could probably play out as more of a consolidative phase for Hindustan Zinc. And especially, I think, at a point where the stock has run up significantly in the last, I think, 1.5 odd week. We've seen 480 levels now, converting to almost 575, 580 mark for Hindustan Zinc. So after this 20% up move in a matter of 1.5 odd week, I would believe that there could be a mild bit of a price correction, but more of a time-wise correction which could happen to the stock price. But that, I believe, could be a good opportunity for traders who are looking to enter the stock again. So if you're looking at a buy, I would say a staggered approach, maybe starting at current levels, wait for some dips closer to 550, 540 mark could be a better approach.
Okay.
Okay, so that's the approach on Hindustan Zinc. A staggered approach is what Kunal is recommending at the moment. But again, let's focus and talk about Shriram Finance. The stock has been focused ever since the get-go on the back of two reasons. One, the board is going to be meeting on the 19th of this month to consider and approve a fundraising proposal. And the other, wherein my colleague Anurag was talking about this earlier in the day, how MUFG, the Japanese company, is looking to buy about 20% stake in the company. So the stock is in focus. But Mitali, talk to us more about the fundraising bit of it, that segment of the news. Give us some more light over there.
Right, rightly said. The stock has been trading in green this morning after the board has announced a board meeting on December 19 to raise more of the funds for the company. And according to the regulatory filing, it suggested that the board is actually evaluating multiple fundraising options, be it QIP or the right issues or preferential allotment or any other possible permissible route. Now, the proposal may actually involve the issuance of equity, securities or any other eligible options. Adding to the positive sentiment, Bloomberg also reported on Monday that Japan's financial giant MUFG is in advanced talk to acquire significant stakes, around 15 to 20% in Shriram Finance, and sources also suggest that the deal size could be as significant as 500 billion yen, and with the deal possibly could be finalized anytime soon now. If you talk about the performance of the stock, the stock has been in green today, and if you look at past 1 month, the stock has gained nearly 5%. Also, if you talk about the last 6 months, the stock has surged nearly 29%. If you talk about the year-to-date performance, the stock has given 47% of returns to its investors. So the eyes now will be closely on December 19, the board meeting results, and further developments, if any, on the MUFG deal, which could be a significant strategic boost for the company. Back to you.
Okay, and the stock is up 2%. We'll also try and get in a technical check on that counter. But before that, we need to slip into a short break. But while we do that, KIMS Hospitals expansion remains on track, with new hospitals performing better than expected and reporting higher average revenue per operating bed. Earlier in the day, we spoke to the chairman and managing director of KIMS, Dr. Bhaskav Rao. We spoke about what he has on the outlook for the company going forward. Let's listen in.
See, as we started about 2 hospitals in Bangalore, one has been started in Mahadevapura at 4 months back. The second one started about a weekdays back in Electronic City. And both of them are doing very well than what we expected. But these 3, which we have started about this year, like Thane, the 2 Bangalore hospitals, will definitely improve our ARPOS on the consolidated basis. And these 2 things, once we get the other insurance and the number of patients will increase, high-end quaternary care just started, it will increase further the ARPOPs. Because we have been added a lot more beds, nearly 1,000 beds has been added. In the beginning, we will be able to show only 30% occupancy in these areas. Once it is start ramping up, then the occupancy will increase overall.
Back with closing trades, and lots to talk about because lots of themes, sectors and stocks are in focus today. So let's keep that conversation going. We have Kunal Bothra in the studio on the technicals and Pashupati Advani, who's joined us as well. Mr. Advani, give us your sense on how you are viewing some of the infra counters. Now, of late, we've seen a lot of back-to-back order win coming in for some of these names. Case in point today, earlier being NBCC received an order worth 345 crore rupees. A lot of these infra names have been seeing some order wins lately. Your take and your reading on the way the infra cycle is playing out right now?
Well, infra has to save us because infra creates jobs, infra creates, whatever we need. The only thing is the speed. And right now, I can only see the government is the only people who are really spending on infra and very, very little private sector involvement. Some larger corporates are looking at it, but they're coming very slowly. So I think that as long as that persists, they're not going to go flying out the door, but at least they'll probably hold their values and not sort of go down. Where I am seeing weakness is sectors like FMCG seems to have some weakness. Banks, the private sector banks today the PSU banks are up and the private sector banks are down. Sometimes it's the other way, but those two sectors are just floating. SBI is doing well, but I don't know for how long. And I think that whole sector is just floating. And I think that real estate also is going to go through some troubled times, because I don't see the demand the way the real estate companies are actually portraying it, which is sad, but they're still trying to sell. But we can tell because the number of calls selling us property aggressively go up. So that's what's happening right now.
That's the view on the real estate sector. But let's also talk about select PSU banks, because they are bucking the trend in an otherwise weak market. We have Canara Bank that is up nearly 2% in trade, the biggest gainer from the Nifty PSU banking index. Its index itself is up more than 1%. PNB and Bank of India are also gaining anywhere between 1.5% to 2% in trade today. Kunal, your view on the sector and any stock-specific ideas that you can share with our viewers?
See, right now, the PSU banking stocks are going through a phase where the corrective wave, which was started off, I think, start of this month, December, end of November. I think after that 3 or 4 months of a consecutive price uptrend for the PSU banking names, we went through a phase of a mild correction first. I believe that in this pocket, you're looking at the likes of PNB showing signs of good recovery. There is mild recovery which has come back into Bank of India. Bank of Baroda is also trying to show some resilience. SBI is back into that 970, 965, 970 plus mark the last I saw. So they are into a decent recovery phase, but that cycle of a big uptrend which was there for the past 3-4 months for the PSU banking names, that cycle will probably try and reboot itself maybe after another couple of weeks, at least for the PSU banking stocks. So this is a minor phase of a rally. If you're looking to participate, then maybe the likes of SBI could be the top bet over here. But then the upside could be a little bit more restricted, I would believe. Say 995 to 1000 odd mark could be a near-term upside. And the stock would continue to grind into this 50 to 70 point range. So buy at lower levels, sell at higher levels for the stock price, and that too constrained into a very tight range of say 5% broadly for SBI is a better way to trade, rather than trying to buy the stock with the hope and anticipation that something which was there in the last 3 months for the PSU banking names would replicate in going to 2026.
Interesting takeover there. Mr. Advani, give us your sense on the entire quick commerce space. Interestingly, earlier today, Jefferies has come out with a report saying that Swiggy's 10,000 crore rupee QIP, the recent fundraise they've done, and the upcoming Zepto IPO is not going to disrupt the way things are working in the quick commerce space right now. If you could share your view on the quick commerce space, what themes or stocks are looking good to you? If you could give us some stock-specific view. Otherwise, the overall sectoral view should be fine as well.
So I think there is going to be consolidation, because these 2-3 big companies have been able to pick up money from the markets, and they're buying the smaller players. The smaller players are having all sorts of issues, even keeping staff at the bottom end, and a lot of noise happening because they don't pay their staff properly, and there's lots of disputes happening. Whereas the strong ones are actually paying properly and are moving the business to themselves. So as long as that happens, I think I see consolidation in the industry. So you mentioned Swiggy, you mentioned Zomato, delivery is also in that space where they're doing last mile. These are the companies that are going to do well because they've got a war chest. However, and these things are here to stay. Our public wants us to they're getting used to it, and it's just a question of whether it's a VFast or a Dunzo or an Eternal, or we don't know which one's going to win, but they're all here to stay. The big ones are definitely here to stay.
Ones are here to stay, that's the word coming in. But let's also talk about Amber and Dixon. Both of these are declining in trade today, more than 2.5%. Kunal, any view on either of these counters?
So, there was a phase where Dixon, Amber, they went through, I think, last week or mid part of the previous week towards the last couple of days of this week into a rally or a bounce back mode. Right now, that rally was on the back of high volumes, and that typically happens. So, in initial phase of a price correction, then a bounce back on the back of higher volumes, and then a potential retest towards the previous swing lows. That generally happens on lower volumes for stock prices. So I believe that both Amber as well as Dixon, I think they're going through that phase where potentially over the next maybe couple of days, they might come very close towards retest of the previous swing lows, but that could happen on the back of low volumes. And if those lows gets protected on a closing basis, then we could be looking at these stocks forming a near to medium term bottom, and then starting a trend for themselves. So we generally see that when stock prices go into a sharp correction, it doesn't go into a V-shaped recovery every time. It first goes into a bounce, then a retest of the previous lows, and if those retests are successful, then you look at the trends resuming for stock prices. So that's likely going to be the pattern for the likes of Dixon, Amber, and maybe if I can club the likes of Keynes, etc. also in the near term.
Kunal, about 3.5 minutes left for market close. It's once again that time of the week where after a weak Tuesday, we're looking forward to a good Thursday. Do you think that trend will play out this time?
Let's hope so. I think we definitely need it. So there is a very interesting positive data point for the market so far. The put call ratio is almost at 0.56. 0.5 and below is a very oversold territory. The last time we were at 25,750 mark for the Nifty, we were at that 0.5 on the put call ratio. Right. So maybe I think we're just about very close to that oversold nature on the put call ratio. That itself could be a good relief rally or a point for a relief rally for the markets tomorrow.
So if this happens, if tomorrow turns out to be a positive trade, I believe what is going to be the third week where Tuesday is weak and Thursday is strong.
Yes.
Yeah, okay, that's quite interesting. On that note, Mr. Advani, we'll let you go. Kunal will stay back with us for closing comments. But let's start winding down for the day. And market as weak as ever. No recovery as such from the day's low. You are seeing that level of about a 0.1% cut coming in, 25,828. Okay, so maybe perhaps some meaningful, nominal recovery above that 800 mark at least for the Nifty. Sensex also 0.1% lower. India VIX is below 10. In fact, we'll get a view from Kunal after the market today on what this India VIX slipping below 10 means. Nifty Bank is lower by 0.1%. The advanced decline ratio is steeply in the favor of the declines, and that is what has kept the market breath very bated today, because the mid-cap and the smaller end of the market are doing even worse than the benchmarks today, and a sharper fall across both of those indexes. It's Shriram Finance, SBI, Hindalco, Eicher, Tata Consumer, Coal India, Infosys and Wipro. These are your top Nifty gainers. On the flip side, Max Health, Apollo, Trend, HDFC Life, Bajaj Auto, SBI Life, all of them seeing cuts of more than 1.5%. In fact, Max Health is lower by about 4%. So quite the steep cut coming in on some of those insurance and private banking names. Sectorally, it's been the day of the PSU banks with good moves in Canara, PNB, Bank of India, Bank of Baroda and SBI. That followed by IT, Metal with Pharma and Nifty Bank on the flat line. Slight cuts on energy, more cuts on auto, FMCG, realty, and the top losing sector today, Nifty Media. Amongst the ones that we wish to highlight at close, it's Meesho, continues to be locked in 20% upper circuit on the back of that UBS buy initiation coming in, and a target price of 220 rupees per share, where Meesho almost is now. A 20% upper circuit today for Meesho. You have India Cements that's done well, about 7.5% uptick over there. IGL on the back of bullish brokerage note today, up almost 5%. You have M&M Finance, ABFRL, ABREL on the back of the CCI nod for the business of their paper, for the sale of the pulp and paper business to ITC. ABREL, that's Aditya Birla Real Estate, also doing very well. On the flip side, immense pressure on Axo.
Data point today is the India VIX closing at the lowest level ever in the last 17 years.
Okay. What are you saying?
2008 is where the India VIX recording started off, and it's the lowest daily closing, 9.85 on the daily charts for the India VIX.
Okay, 9.84 in fact.
9.84, 9.85. So the last time I think we were almost at 18th September 2025. We were at 9.89 on the India VIX on daily closing. But what happened post that was in the next 10 days, the Nifty fell almost more than 1,000 to
Can't
1,500
post
points.
that. As I remember, we slipped below that 10 mark, but yeah, 9.85 seems to be another low for us.
So this is the lowest low on closing basis for India.
And what does this signal for the market now for the next 10 days?
The historical readings are not positive. Now, to put it very bluntly and in a very simply note, it's not positive. So, see, the correlation is that India VIX, when it goes down, it tells you that the markets are not in a mood where there's too much of complacency in the market. We are nowhere in the zone of complacency. That's the only differentiated aspect this time around with respect to the previous times. Whenever India VIX has fallen below 10 mark, that's generally happened when the Nifty has been at the higher end of the price curves. We are at the lower end of the price curves. No complacency, no sentiment positive for the markets. So that's the only behavioral change for India VIX this time around. But when you look at the absolute reading, India VIX below 10, the last, I think, 4 or 5 times where we've seen that happening, one was the latest one, I mean, the more bigger one was in December 2019. And we all know what happened in Jan 2020, Jan, Feb, March 2020. So India VIX falling below 10, closing below 10 on daily and weekly closing basis generally is not positive.
So does this indicate fear in the market at this point?
Yeah, so this indicates some sort of a fear in the market.
Okay, Kunal, thank you so much for taking your time out and joining us. With that, it's a wrap on this edition of the show. Thanks so much for tuning in.